Investing in buy-to-let property is a solid grounding for your retirement planning. But it's equally important to invest within the correct structure to ensure that the wealth you create is protected, to enable you to leave a legacy, and to be able to take advantage of tax benefits before and during retirement. I'm Jacques Fischer, the CEO and founder of the IGrow group of companies, and today I want to talk to you about one of those important companies called Trust Focus and tell you a bit more about what it is Trust Focus does and how you can benefit from the services they provide. Trust Focus assists IGrow clients to invest in property within the correct structures to ensure their investment is low risk, tax efficient, estate friendly. There are three main forms of entities for investment: personal capacity, trusts, and companies. Most people purchase property within their personal capacity because they're not aware of the structures out there for asset protection. There are several factors to consider when investing in your personal capacity. You and your assets are at risk from personal creditors. All rental income received will be taxed at your marginal rate and could possibly increase your tax rate further. When you pass away, there will be estate costs that you have to pay to SARS, which can add up to almost 42% of the value of your estate in estate duty, capital gains tax, CGT, based on your marginal rate, executors' fees. Estates can take up to 2 to 3 years to wound up after your death, meaning it's 2 to 3 years that your dependents or beneficiaries do not have access to those funds. When investing in property within a trust structure, there are several benefits, such as no estate duty, full control over your assets, income tax benefits. The trust does not pass away, so you have the ability to leave a legacy to your dependents and your loved ones. The beneficiaries of the trust have access to the assets within the trust. Factors to consider: tax rate 45% on all rental income received, interest of 8% on loans within the trust. When investing in property within a company structure, there are several benefits. A company's tax rate is 28%, so investors pay less tax in a company than a trust. You can draw company salaries. Assets are protected against creditors. Control: only one director is needed to register a company. Trust Focus recommends a hybrid, making the most of the benefits of the different structures available. We distinguish between a wealth protection structure and a wealth creation structure. All paid up or unencumbered assets are structured in a family trust, a wealth protection structure. All investment assets or encumbered assets are structured in a company and a trust structure, what we call the wealth creation structure. The investment properties will be bought directly in a company, with the shares held by a property share trust. You will then pay tax on all rental income received in the company at a lower tax rate of 28% compared to the income tax rate of a trust at 45%, or in your personal capacity at the maximum rate of 45%. The trust will provide protection against creditors as the shares in the company are indirectly owned by the share trust. Trust Focus will assist our investors in registering their company and trust and transfer shares of the company to the investors' trust. Then properties can be purchased in the company. This structure makes it easier for investment properties to be passed from generation to generation. There are numerous benefits to this structure, like the assets are owned by the trust and company. The rental income received doesn't increase your personal income tax rate. Estate costs no longer applicable, and you leave a legacy to your loved ones. The added benefit of including a company is that if the conduit pipeline principle is taken away, it will not affect you in any way. What is the conduit pipeline principle? Trust income or capital that has been distributed to beneficiaries is not taxed in the hands of the trust, but rather in the hands of the beneficiaries. When the trust distributes money to a beneficiary, the first 75,000 Rand will be tax-free. Anything above 75,000 Rand will be taxed according to the personal income tax rate of the beneficiary. Trust Focus offers a variety of services: structured investment and asset protection, drafting and registering of trusts and companies, amending existing trust deeds, providing trustee services as an independent trustee, drafting of wills, and personal one-on-one strategic consultations. Trust Focus and IGrow look forward to assisting you to retire financially free through structured and strategic property investment. Contact Trust Focus to talk to one of our expert trust attorneys today and also ask about the IGrow Wealth Plan that is changing the retirement industry as we know it.